Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. All right. Hello, hello. This is Abel Pacheco on the Five Talents Podcast. Your host. We are super excited today because we have an amazing guest, Mr. Arturo Borges. Arturo, thanks a lot for joining.
Man, I gotta say, it caught me off guard, man. I didn't know that you pronounce your name Abel. That's a new one. But thanks for having me, man. I really appreciate you.
Yeah, thank you very much. I originally met Arturo when on his podcast, and It's amazing because Arturo and his partner they co-host the first ever real estate show in Spanish, and it's focused on educating like Hispanic community on how to invest in the U.S. real estate. And they reached out to me, and I go, the show is what's the name of the show?
Se Habla Real Estate.
And I responded back, and I go, I would love to be on your show, but I don't speak Spanish. Entiendo poco, pero no hablo muy bien. And they were like, it's okay. We have a few of you guys, a few of you coconuts that are
we thought, Abel, Pacheco, I was like, this is going to be a good Spanish show. It turned out the other way. That's fine.
I know, but thank you very much for having me. They hosted me on their show, and they did a little translation for me. But I'm very excited, appreciative to have somebody like the likes of Arturo, because Mr. Borges has done some amazing stuff in the commercial real estate and real estate, in general. And so for those listeners who have not heard of him, let me give you a couple of bullets so that way here's somebody you want to really pay attention to. Grab a notepad and a pen, and if you're in a spot to take notes, I have a feeling you're going to get more than a few, insights and wisdom to apply to your business. But so Arturo, today he serves as the VP of Business Development for Propfolio Management. It's a vertically integrated property and asset management firm, about $800 million in assets under management. So that's 800 million. That's just under $1 billion. And he himself has been directly involved in the raise and placement of about $80 million of equity, encompassing about 1,700 residential units, over $350 million worth of real estate acquisition. So he's got an amazing background and some amazing insights that we're going to hear about today, and just excited for an amazing guest like yourself. So Arturo, thanks again. Why don't you say in your own words, tell us a little bit about yourself and what you're doing today, and we'll just get into a conversation, my friend.
Amazing, man. Yeah, again, thanks for having me. And yeah, that's pretty much in a nutshell what I've done. I'm originally from Venezuela. You can tell by my accent that I'm not a Miamian, but I grew up in Venezuela, came from a very entrepreneurial family background. My father built a very successful business with over 30 years of operations in my country, in the food and beverage business, the distribution and representation of brands like consumer brands like Tabasco pepper sauce, French mustard in Venezuela, in Colombia, in Ecuador, in Peru. So he came from that background, and became the VP of the company at one point, and then I came to that yield where I had to make the decision where, what do I really want to do? Do I want to grow and expand and lead the family business, or do I want to go with what I found to be my real passion, which is real estate? And I made the decision finally. Really, it was one book that triggered that when I was probably 13 years old, which was We Want You to Be Rich by Trump and Kiyosaki. It was a very, very good. Yeah.
I've seen the cover.
Uh-huh.
and I may have even bought it. I didn't read that one,
Right.
but I was like, man, I should probably get into that. But go, please go ahead, tell me.
Yeah, it's a pretty good book. You know, it's been a while since I read it, but it was a great book, and it triggered that really, that little something in me that I've always thought about real estate. And I got in love with this idea of, passive income and wealth creation and long term actual, again, wealth creation building. So yeah, I made the decision, jump into residential, then transition into the commercial space. Really because of, different from the residential, where you kind of cross your fingers and just hope for the market to continue to go up and appreciate. In commercial, you have the ability to directly have an impact in the value of the investment. We can talk about that a little bit later, but really fell in love with it and the scale of it. And then, my background really is in capital raising and investor relations. Like you said, I've been instrumental in the raise and the placement of a little bit over $80 million worth of equity to buy about 350 worth of specifically commercial multifamily real estate, about 1,700 residential units. And I'm personally partnered in a portfolio of 678 units in Texas and Florida. And I'm currently the vice president of Propfolio Management. We are a vertically integrated property and asset management firm, and we're powered by proprietary technology. So,
Yeah, that's great, man. That's a tremendous background and a tremendous, kind of thought process to where you got today, right? It's the
yeah.
family business or do something for myself and get into some real estate. And so what was your first kind of commercial, project and not a case study, not a deep dive, just high
Right, right.
level, what was it?
Well, I got into, so it's a good question because, there's different paths you can take, and this because I know you also raise capital.
Mhm.
And because I didn't have the experience or the track record to go ahead, raise money and do, kind of my own deals, the way I started was I partnered strategically with best in class operators. And then
Mhm.
I added value to them, bringing equity to their deals. And I added value to my investors, providing them with, best in class investment opportunities in the multifamily space. So that's how I really got started. It was a deal in Texas of 398 units that I raised equity for, and went
Cool.
from there.
That's awesome. And
Yeah,
what year was that?
this was in 2017.
Okay.
Yeah,
And how long did you do? Because it sounded like you did some residential first.
yeah.
How long did it take you to go from the
It was
residential to
no,
like,
it was quick, man. It was a couple of years only. A couple flips, and then you transition into the commercial,
Mhm.
and that was pretty much it.
All right. And with
Yeah.
so the mindset of the family business to that, what did your family think of that? What did you, were you met with friction or, congratulatory or how was it?
No, not at all. It wasn't like, it wasn't real friction. It was more of an emotional thing. And it's still to this day, because I have two brothers and two cousins in the same family. It's my father, my uncle, they're partners, and none of them are in the family business. So I was like, I was the only one left in the business, which,
Oh, okay. Got it.
I was supposed to take it from there. And it's still to this day is a little bit, I don't get romantic about stuff, but it's a little emotional. The fact that, there's no one else to take over the business, the family business for over 30 years. So that one was a little bit, a little bit a tough one to crack, but it was, I mean, not at all. I mean, family has always been very supportive.
They're supportive of you all the way through. That's great. And
Yeah.
well, what was it like? It sounds like you went to a VP of that
Yeah.
company, so you had some successes. If you have a successful business, your dad doesn't put you as a VP just because
Right.
you show your performance, your hard work, your ethic. What was
Mhm.
one or two lessons you learned in your rise from you know normal everyday employee worker to VP there?
So at my father's, at the
As
family business,
specifically as
uh,
your father's, I like these things because they really shape your commercial real estate experience, which I'm going to talk about in a little bit too. But what do you think? A couple lessons you learned from the professional world?
so I mean, really, it was. Um, if I understood your question correctly, what did I learn coming up in the family business? Well, first of
Hmm.
all, I mean, nothing's been given to me. I've always gotta earn it, which you tend to think that if you come like we're not necessarily a rich family, but we're well off, and we've had amazing opportunities throughout our lives. But you number one, nothing's given to you, you gotta earn it. And that was something big that I learned. And I had to work my like started carrying boxes around and delivering to supermarkets,
Yeah, yeah, I love
just
it.
like he did, when he began. And then, like you said, through production and just good practices and operating at massive levels, I got to a position where I was pretty much just head of the company, just below him and my uncle running the operations and the business development effort. So that's a big one. Mainly, nothing's given to you. You got to earn it. That life doesn't, it doesn't owe you anything. In life, you get what you get out of it. And I actually, really dislike that word of the word of deserving something. You don't deserve anything.
Yeah.
You make out of what you have.
Yeah, those are awesome points. I think it's easy for somebody to look out, outside looking in and go, ah, well, he's here because of this, his
Yeah.
family, a situation. We're like,
Uh-huh.
nah, if your dad is
Yeah.
successful and he built the company and he's did it for a number of years, he's not just going to put you in that situation just
Literally.
because you
Yeah.
got to prove it. You got to earn it. Life
For
doesn't owe you
sure.
anything. I love that
For
mindset.
sure.
And then, it's what you make of it, man. So you definitely took it and ran. And so, now, tell us about what you're doing today. The VP of Business Development for Propfolio. You guys serve mainly the Florida markets, and I want to do talk about a little more commercial real estate, but just tell me what you're doing today so that we get a good picture.
Absolutely. So yeah, I'm leading the expansion efforts for the company. We manage roughly $1 billion in assets, a little bit under a billion, like you said, and our goal is to get to 10 billion within the next 7 years and become the first ever property trading platform in the world. So like a TD Ameritrade or a Schwab account for real estate. And we're doing just that, right? We're innovating and creating some proprietary technology that's really disruptive. And so we manage every single operating and financial aspect of a property. So we're property and we're asset managers, and then we're powered by technology, which is uh, very unlikely, in the industry. And we work with small investors. We work with big institutional funds, and we manage commercial and residential as well. So that's pretty much what I'm doing. I oversee the marketing, the sales efforts of the company, and driving it to 10 billion.
Yeah, well, that's awesome. Well, congratulations on the current, role, and then, here's to big things in the future, and we'll
For
continue
sure.
on. So tell us a little bit more about that. Like when you say property and asset management, combine
Yeah.
them with some, really great software technologies. What do your customers, your clients, people like me, what advantages do I have of using like something like portfolio management?
For sure. Yeah, absolutely. So ideally, this, Abel or Abel.
That's okay.
as
I answer to
as
both. My grandparents and parents call me both. So go, you're good.
That's good. Um, so ideally, as a real estate investor, we want to be able to buy a good piece of property in a good location and pay right for it. Put some good debt on it, and if you have those ingredients aligned, you are positioned in front of what can be a great potential investment. But nowadays, and this with the constant competitive pressure, especially in a market like Miami, the West Palm, Fort Lauderdale, and Miami MSA, your ability to manage those properties efficiently is really what's going to put you over the edge and really make you maximize those returns or achieve those premium returns for your investors. And when it comes to management, there's two verticals: the property management side and the asset management side. So the property management side is that process that deals with the operating aspect, the day-to-day of a real estate investment, while the asset management is that more sophisticated financial aspect of a management of a deal, which really looks at that long-term value creation strategy. So ideally, you want to have both, right? And you want to be efficient at both. But typically, property managers don't deal with the financials, and they gotta go hand in hand. I've always asked myself, how is a property manager supposed to perform an investment if they don't have the financial metrics or the know-how to financially perform it and really maximize returns? And then on the other hand, a regular asset management company can be great at numbers and financially see an asset, but they can't operate the day to day. Well, we have more than 40 years of experience operating the day to day of a property. We manage over $800 million worth of real estate. We've been involved in over 35,000 transactions valued at more than $3 billion. So when it comes to management, we know exactly what we need to do to maximize the returns of our clients. And then we take all those two and we power that by technology. When I say technology, we've built a piece of technology that not only allows us to operate a day-to-day of a property, but really to financially see an asset and outperform investments and maximize returns. Because what our technology does is it provides us with real-time financial data, so we can then make real-time financial decisions. And then on top of that, we bring a level of transparency to that process and efficiency that's just unparalleled. Like before and after pictures of every single repair, renovation, capex project that's been going on to the property, all the lease details, when a tenant's moving in, every single detail about the lease, all your accounting, your P&Ls, your balance sheets, your cash flow statements in one simple, easy to use platform. So it's huge. That's pretty much what we do.
Oh, that's awesome. That's good. That's good stuff, Arturo. So I'm
Yeah.
excited for you. And you guys serve pretty much Florida only, or are you guys branching out to the US, or how's that look?
We're going to be expanding to other markets. Texas is in our radar, of course. Very amazing economic fundamentals all around. But yeah, mainly we're focused here in Florida and specifically South Florida. So West Palm, Fort Lauderdale, and Miami, MSA. That's where we really have that proven track record of success.
All right, good stuff. And so for help us as a buyer, right? I'm gonna frame this a little bit. Let's just say I am a new general partner. I've done one, two, maybe three deals, and as that general partner, I'm trying to pick the best property management company. I'm trying to pick the best possible team member that can help me with asset management. What are some of the maybe pitfalls that you see a normal, new general partner get into when I'm, getting into these deals? Either some pitfalls or some things to avoid as a new general partner in your from your perspective.
For sure. I mean, you like for example, in the capital raising game, the vetting process of an operator, it's got to be that same strategy, criteria, and mindset when you are vetting a property management company. So there's the I call it quantitative aspect of it, where you really want to make sure that they know what that they're doing, that they have a proven track record of success executing the business plan that you're also going after. So if you're a value add investor, or you are, residential, whatever it is, they have a proven, showable track record of knowing what to do and how to do it and maximizing returns. That's huge. And then, the personal, uh, qualitative aspect of it, I think is huge, because it really is a matter. The number one issue I see in property management companies or owners that work with property managers, and you can actually look the stats up, is the lack of transparency and efficiency in that process. So, that personal connection and your ability to really trust, being transparent, trust what the group is doing, and you trust the actual operations of the company. So for example, with us, we have that great sweet spot where we're not that big, even though we're managing roughly $1 billion in assets, and we're not, of course, that small. And so we can bring in that unique entrepreneurial approach to business with still an institutional execution. And that's huge. And then because we have such a short and flat platform, the decision making process is a very seamless one, where the actual co-founders of the company are involved in every single step of of the investment. So you want to get to know the team. You want to have the ability to have access to the team, and then you get, the reporting aspect of it, the transparency of reporting, of knowing what's going on with your asset. That's huge. So asking questions in regards to that component, it's huge.
All right. Okay, man. Thank you very much, Arturo. I know we're kind of going through these questions fast, but there's so many insights I want to make sure we catch. But to kind of reframe a couple of these things too, I wrote down some notes. When, if you're looking for a new property manager and you're trying to figure out who's the right person, who's the right team, who's the right crew, he mentioned proven track record in maybe an asset class, a market, an area that you wanted to go do. If you're going to do a value add, make sure they have value add. If they're doing a lease up from the ground up, then you need to make sure you're with somebody to lease up ground up. Somebody who has identifiable or verifiable, is how I heard it, track record of maximizing returns, right? I like the transparency part, which is good. That transparency part is like, man, if you're not on a weekly call with your property manager, it's hard to get all this information. They may have an Excel sheet or something like that they're working off of, and that's what you're reporting on. But you want that insight so you can make the best decisions, and that's kind of, I think, what you're saying at the very end: access to information, decision-making process. So you can say, hey, in real time, what's actually happening, and then help them and you and the asset manager all make the best determination. Like, do we need to lease up the property? So do we need to spend more on marketing? Do we need to go, have some concessions or give away some, whatever we need to do to get these things leased up? Or no, I'm under market rent, so we can juice it up by another, $50 a month or whatever it is. So yeah, I love all those mindsets. Great stuff. And then, so now that we have kind of, I think I have a good picture of, man, some of your past and how it shapes today's role, because you fit this role perfectly in this new company. Man, I wish you tons of success. Hopefully you take $1 billion and go to 10, and we see you as the next, huge platform that we all are going to go seek. But there was a lot of steps in between, that first deal, which was huge, which I want to talk about in a minute. But man, there was a 390 something deal. But like you said, I didn't lead it. You were a partner in it. You were a percentage partner in a bigger deal. You saw the value in partnering with a team that already was best in class. You helped your investors put their money in with an operator that's best in class. And that was the first commercial property. And then you've done a number of them, and you've raised a ton of capital. So raising and placement of $80 million of freaking capital, man. Give us some of these mindsets. Like, first, how do we even wrap our mind around this number? It's huge. I help me deal with this stuff, man. Any one of them, $80 million. How do I even approach this? What are you thinking, and how does this work? And just share a little knowledge for us, man.
Sure, man. I mean, listen, the so I think, a big part, like you said, it's big numbers, but it's you just add a zero to it. It's the same 80 million to 8 million or 800,000, and you would, it's arguable. But what I'm saying is, you always think that you are thinking big enough until you actually put things in perspective, and you realize that you're not operating to your full potential. Like, we're always underestimating what we can do, always. And I've made big mistakes on that, and I always tend to be super hard on myself, and what I can accomplish. And so the 80 million to me, while I didn't raise that money myself alone, I've been
Part of a
involved,
team. Yeah.
very instrumental in the raise and the placement of that amount of equity. It's just a number, and hopefully it gets way bigger over time. But really, it's about transparency. Again, we go back to transparency. If you don't have transparency, you don't have trust, and if you don't have trust, you really don't have anything. So I would say to someone that's that looking to raise capital and do own deals or whatever it is, that transparency aspect of it, right? Your reputation, your ability, especially for example during COVID. your ability as an operator, as an investor, or as an asset manager to step up to the plate, and when times are bad, being even more transparent and double down on communication to your investors speaks volumes about yourself, about your ethics, and about your ability to to be a leader and to manage their money. So always be transparent. Every relationship you have, every encounter, do it with a mindset of nurturing for the long term, and having the ability to see the value of partnering, being part of a team instead of going at it alone. Really having that ability to see the big picture, the full 360, and ride with people that have done it before and that are doing great things, and being part of that. That's something huge.
Yeah, yeah. You don't take this undertaking of $80 million on your
Yeah,
own. That's for
for
sure.
sure.
There's a team, a big team, teamwork, just like any other big organization or corporation. Which I like the way you put it, because you have to stretch your mind to say this is possible. Eight
Yeah.
hundred grand, 8 million, or 80. And really, if you guys are listening now, if you've only done one or two or three deals, or maybe I'm a passive investor, for the passive investors listening too, you've invested once or twice, or, maybe three times, and, you're getting after it. But your 50K as an investor, or your $2 million personal raise, or whatever it is, it's so small when you think about business, just any other organization or any other business that we're involved in. Chevrolet, Ford car dealerships are huge,
Right.
and we ride around in a $30,000 car every day, and we kind of take for granted how big the organization is and company. Sam's and Walmart are humongous, and so is Amazon,
Yeah.
and these entities. But there's a bunch of $10 million companies, a bunch of $50 million companies, a bunch of $100 million companies, and
Mhm.
it's not one person that's running a $10 million company. There's many multiple different people, even at a small, and I say small because a $10 million business is
Yeah.
relatively small when you compare it. You just have to have the same mindset. I love it, because commas and a couple zeros, Arturo, it's just 80 million. It's $80 million. No big deal.
Yeah. Yeah.
$350 million of commercial real estate, or in your case now, 800 million of assets under management.
Right.
We're actually pretty small comparatively to all of the real estate that's out there. And if you
For
have
sure.
that head on right, you can stretch your mind. And then I like transparency and trust.
Mhm.
uh yeah, you're dealing with people's money, right?
Yeah.
As a passive investor, you should also be searching for your general partner that will be transparent with you, will give, that you can build a trust and establish, because it's not it's not always creams and peaches. My buddy used to
Yeah.
say peaches and cream. It's not always creams and peaches, is how he would say it. And it's not, because it's gonna get ugly sometimes. But if you have an operator or somebody, that
For
at least to
sure.
give you full transparency, where your money's at, they're working hard,
Yeah.
teamwork aspect. So thank you very
And
much for the mindset.
setting expectations to that point, Abel, because times is not a matter of if, it's a matter of when, because times will get tough, and your ability to set expectations up front of, listen, there is risk involved in every single investment, like anything in life and any other investment. But simply having, you're having to trust that that team that it's put together and buying that asset is capable of executing and delivering and going through those bad times, and that's key as well.
Yeah, yeah, I love it. Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, If you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. And so, okay, we talked about the beginning. We talked about your quote unquote middle, which is your first deal, or your 390 something property. And then you've had multiple of those deals. How did you find your first team? Was it one team that you did all these deals with, or several? First thing?
It was a couple teams only. Yeah.
Okay. How did you find those partners? How did you, speak tactically and give some advice to somebody that's trying to get their first one? They're trying to get involved and they're like, well, I don't even know where to start. Like, how do I find my team? How do I find the people that I should work with, and, et cetera, et cetera?
Listen, I wish there was a cookie cutter approach or like this very smart answer. I mean, I'll give you mine, but
yeah, your insight is perfect, man.
Exactly. But it's about putting yourself in that position. It's about leveraging whatever you have and putting yourself out there, going to events, networking with people. For example, LinkedIn nowadays, to me, it's a super, and you leverage LinkedIn a lot. Trying to step up to your game. But yeah, man, like LinkedIn, it's been a huge tool. So nowadays, I mean, there's really no excuse for you to really be able to find the right people, vet the right operators or whatever team you want to put in place, and reach out to them, man. I mean, that's what I do on a daily basis. If there's someone I want to reach out to, I literally just, and I'll give you this, this piece of advice. It's not rocket science. And I reach out to, I'll say later, whatever, the biggest, most influential person I've reached out to, but whoever I want to reach out to, I do. And what I do is I just take, usually there's only like 6 or 8 different combinations for an email address. So what I do is I just put the I go to the website, I make sure it's the right website of the company, and I put the actual domain copy, and I put the 6 or 8 different options that can be. It's Abel or Pacheco or whatever combinations I do. Mm-hmm. I BCC it. I send that out. One of them is going to be, they reach out back. I set up a call. Game over. There you go.
I love the BCC, man. That's so clean.
For sure. And so, it's not the most sophisticated approach, but it's just, I mean, the reason I'm saying this is, like, you just figure it out. You can reach literally any, like, for example, I reach out to Steve Buck, which is a CEO of ZRS Management, which they manage about a little bit over 50,000 units. Mm-hmm. He's a big guy. I really like him. I really like his practices and his approach to business. I did that. He didn't answer, and I sent him. I followed up with him, many times. And so what I did is I put a new shoe, right shoe, in a box with a handwritten letter. I don't really remember what I said, but it was something like, listen, this represents that I got the first foot in the door. Get back to me so I can have the opportunity to put the second one in the door, or something like that. He immediately responded. I got in touch with him, and now I actually was able to kind of start building a relationship with him. So what I'm saying is, you got to be creative. You got to think outside the box. You got to be proactive. And if you really want to do something, you're going to do it no matter what. So just reach out to people, man. And simple. I mean, it's really simple.
I love it. Well, anybody that's listening today that you're trying to figure out, I'd love to invest with them, that team, that group. I just don't, I know how to open up a conversation. That conversation is really easy to open up. If anybody's interested, please call me. On the flip side, as a general partner, you're thinking the same, and you're like, it's a little harder to get on their team, to get in their deals, to get in their network or pipeline or whatever you want to think about it. And just a very thoughtful approach to getting in touch with somebody, just like Arturo mentioned, is the difference between noise in your LinkedIn or your inbox or
Mhm.
getting your first foot in the door. I love
Yeah.
it. So
There you go.
that's great, man.
It's a $1 million golden nugget right there. Use
I
it and
think
let me know how that goes.
I think there's somebody in here that actually is going to take the approach and do it. So
I hope.
find out the shoe size and find out their favorite shoe. Even better. I got you the second one when you have the conversation with me. So that's great. I mean, you it sounds like just reached out and networked with the people that you wanted to go do deals with and established some kind of relationship or connection with
Yeah.
them and just kept going, huh?
Yeah.
And then your first capital raises, was it maybe tactically, was it friends and family first, was it business partners, people that you knew, was it a bit of both, did you market, just kind of, how do we even find that many investors to kind of help us work this many deals?
Sure. I mean, it's like I said at the beginning, I don't necessarily come from a rich family, but a well-off family. So I did have the opportunity to be, to have a network of people I could reach out to for those first deals. And then
Hmm.
because I was able to vet the right operators and the right deals and put myself in those right investments, it was just a referral game. And that's how it grew. And then, you have past professional clients, and then, it went from there. But it started definitely how anyone starts. Mainly, it's really friends, family, people the closest to you that can actually trust you. And it can actually work the other way, because it happened to me that many of my closest family members or friends didn't actually trust. He's like, you don't have a background in real estate. Like, what are you doing? And
Yeah.
they actually turn around on me. That also happens, but usually those are the people that are going to be the easiest to raise money from. It's your friends and your family.
Yep. Good stuff. Thank you very much. And um, before we go, right, can you give any advice for the passive investors that are listening? Passive investing, we're just trying to do the right thing with our money. We
Mhm.
know that somebody else is leading the deal. We know that we've got to choose the right market, the right team, the right deal. But just any insights you can give for passive investors, tactically or overall thought process, or just any advice you can give to somebody who's trying to invest properly.
Sure. I mean, listen, I think that commercial real estate specifically is the asset class where global capital wants to be in, because it's a real tangible asset that over time will go up in value. And it's always shown its resilience, and it will continue to do so. So that's number one. And then when it comes to passively invest in syndications on in different investment opportunities, again, just be don't be too skeptical, but be have a I would tell you have a set investment criteria, not only for the investment itself, the financials, but who do you want to do business with? Who do you trust mainly? Who do you think has the ability to execute on that investment, has a track record, have, has the really very important is that, that sixth sense of, this guy is gonna do the right thing for me when
Hmm.
times, when tough times come, just like it did with COVID. Who
Yeah.
is gonna be able to step up to the plate and talk to me about what's happening, be transparent, because that's what you want. Because again, it's not a matter of if, it's a matter of when. And what you want is not only a team that's capable, but a team that's transparent and that you can trust, that is going to tell you the truth and is going to be upfront. And that's what I would tell you. And don't be too over skeptical. Listen, at the end of the day, there's gonna be risk involved in every single thing you do in life, and investment specifically. You're in an asset class that's resilient, that's, you can touch. There's appreciation, there's depreciation, there's, all the tax advantage of it. And if you have the right team in place, it's really, it's a very, very solid, stable investment. So don't be too skeptical of it. Usually, the people that I've dealt with that have the most money and the most liquidity and the most successful are the ones that do the right things and they do their due diligence. But at the end of the day, they don't have that attachment to money. They're willing to just move forward and lean in, and and, and,
Yeah.
and, and that's it.
Yeah. Yeah, I love it. Thank you very much for the insights. If our listener base wants to get in touch with you, either I'm in Florida and I need a good property and asset management company, which is you, or any other reason, get in your world a little bit, where should we reach out, Arturo?
They can reach out at Arturo Borges all across social media, especially in LinkedIn. And they can email me directly at Arturo, Arturo at Propfolio M as in Mary.com. Or they can even call me directly or text me 305-785-5594. It's 305-785-5594. And I'll be more than happy to, answer any questions, add value in any way. And yeah, I'm here for you guys.
It's been awesome having you on, man. Thank you very much, Arturo. I'm blessed with a good friendship like ours, and excited to see the relationship grow and your success through the years, my friend.
Absolutely.
Yeah. Is there
Thank you,
anything?
Abel.
Oh, you're
Yeah,
welcome.
go
Thank
ahead.
you very much. Oh, my pleasure. Is there anything else we didn't touch on, or anything you wanted to share, bring exposure to, something I didn't ask about?
Yeah, man, you didn't ask about my favorite food. No, I'm just kidding.
What is it
No,
over there
as
in Miami? What is it over there?
in Miami, I mean, Miami. This is a interesting mix of nationalities and cultures.
Yeah.
So there's nothing really. But no, but I'm just kidding. I mean, I'm very big on Peruvian food.
Oh, I love it.
But yeah, man,
I
it's
love
it's
it.
been fun. Love the questions. Really appreciate you as a person. Very ethical, very knowledgeable, and yeah, man, looking forward to continue to nurture a relationship. Okay.
Hey, man, it's been great. Thank you very much. Again, my name is Abel Pacheco. I'm your host for the Five Talents podcast. If you heard something that provided you value today and you haven't subscribed, left a review and give us a written review, I would love you to do so. And also, Arturo would love you to reach out if he can help you, or vice versa. So talk to you soon. See you on the next show. Again, Arturo, thanks a lot for your time.
Thanks, everyone.
Bye-bye. Thank you for listening to this episode of the Five Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the Five Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the Five Talents podcast.